Yo, what's good, gang? What's going on? Apologies for the punctuality. It's very poor tonight. What's happening, ladies and gentlemen? How are we this evening? Sound check. Are we all good? What's happening? Oh, man. Stephen Curry, yeah? What's going on, all? We're just waiting for a few people to step through, man. What's happening, everyone? We all Gucci, bro. I like that. Yes, we are going to have a conversation this evening. What is Bitcoin doing? All right? A couple of topics are going to be discussed tonight. So we're going to roll out with a bit of a conversation about price action. More importantly, intention. All right? How is everyone this evening anyway? PC Shed, you in the room. Soul Cow, Greg. Another Greg. We've got a Greg M and another Greg. Istvan, Varga, what's good? G-Unit, what's happening? Righteous Reject. Got a lot of people in the room tonight. Awesome. Okay then. Euro USD going sideways. That tells me one thing. That they're holding the majors and moving the crosses. That's what they're doing. You know? I'm very well. Legend, thank you very much. I'm all good. I am all good. All right then. Seems like we have a few new people in the room this evening. Welcome to the Traders Reality Crypto channel. We are actually a channel that actually does help people understand how to make money in the game of trading. And that's just not in crypto. We're talking about Forex, commodities, stocks, shares, you name it. The system is repeatable. The patterns are repeatable. Why? Because people will always be fearful and people will always be greedy. You take away those two main indicators, you will have yourself zero market. Till then, it ain't going to change, ladies and gentlemen. Let's get with it. Be sure to like and subscribe if you are new. We got to plug that in somehow. Let's go with it, guys. Okay, then. So, as always, I like to keep these streams short and sweet. I want to get straight to the point of what's been going on. Now, if you pass through to today's stream at 2 o'clock, all right, we're about 1:30, 1:45, we were talking about Bitcoin's behavior and trying to work out what New York was going to do next. We started to see this behavior over here with Bitcoin. This is the 5-minute time frame, and the reason why we are on the 5-minute time frame is because patterns develop within patterns. Okay, cycles develop within cycles. This behavior by cryptocurrency, or should I say Bitcoin, across the board today has been very interesting. Why? Well, let's just look at everything else, okay? Who actually performed well today? No one. Well, with the exception of Sol, okay? Sol has held the gains, all right? Sushi has actually moved quite away from its actual entry point, open today. Done very well, all right? Ethereum held the zone perfectly. W formation. How many more times do I need to say it, guys? Came back and recovered the previous projection point. Happy days. We've got another pool of liquidity up here that they may be looking to take. All right. Let's look at BNB. What's BNB done? Another W formation. So in light of fractional disparity, ladies and gentlemen, it's like everything has been held today. It's like they held it across the board. Why? What's causing this behavior? Let's have a look at News Cryptocraft. All right, let's have a look. What's being thrown about? Here we go. Senator Toomey calls for suggestions on US crypto legislation. Now, that was 7 hours ago. Price didn't do anything. Okay? Look at what they're telling retail traders. Right? Retail traders don't just come to this website. This website takes information from various websites. So look, it's all about ETFs, legislation, you know, the best coins. All right. Everything looks like it's hitting against Bitcoin. And you've got good news about Bitcoin. Who was it that said it earlier on today that Bitcoin or crypto is likely to replace the dollar? Do you understand what the implications there are if cryptocurrency is replacing the dollar? Do you understand what will happen to fiat? Do you understand what will happen to Forex? the $6.5 trillion daily turnover liquid market. Do you understand? If they start to close off fiat, where do you think $6.5 trillion is going to go? Because they still want to trade it. Traders will always be traders. And if cryptocurrency is where the money's going, well, it looks like we're going to get a $6.5 trillion pump into cryptocurrency. We ain't talking about moon, ladies and gentlemen. We're talking about universally smashing the highs. Now, that's not me, hyping you guys up, but I'm trying to bring context to help you understand the implications of if cryptocurrency does surpass the dollar, all right? If Bitcoin does take over dollar, all right? Or whatever coin it is that is going to replace fiat. Right, we're just having a conversation now, ladies and gentlemen, okay? Before that happens, boy, that's going to take a little while, okay? But the fact that they're talking about it now, what more can I say? So let's get with the program. Moon Boy, I'll take all of the jumpers. Here we go. So, Bitcoin. Today, it's been a treacherous day. It's been a horrible day. Probably great for scalpers, all right? Because for a scalper, all right, there have been many peaks, all right? And you could have traded so many of these situations, all right? You would have taken quick profits, but I do understand that trading on Binance and other platforms, you are going to get hit for fees. So you're really looking for moves from here all the way down to here, okay? And it all depends on your trade size if you're going to get the alleviation on fees, okay? The alternative is you try and trade on IC Markets, which is this platform. It's a bit old school, but there's literally no fees to trade Bitcoin, Ethereum, and XRP. You don't get any luxuries like all the altcoins on this platform. It's just the big majors, okay? But there's literally zero fees on this platform. You're just paying a spread, all right? If you want to download that, just go into the description of the video. Okay, so let's understand something. What is it that Bitcoin's doing right now, okay? Across the board, you can see that they're working something. Well, what is that something? Well, we understand that 47,000, okay, is a whole number. Let's get the number up. Here we go. Move it ever so slightly. Bang, 47,000 right there. What is it they like to do? They like to build their longs below key notable areas. Just look at all the red vector candles that are actually below the 47,000 number. Are they building longs below this key area in anticipation to move higher later on? But the flip side to it is this. Look at how many green vector candles there are above the key 47,000 zone. So with that information, what are we left with? Well, if price is going to continue higher, we need to look at the higher time frame. All right. So we ideally now want the 50 EMA on the 15-minute time frame to start edging upwards. This is what we're looking for. We're looking for this behavior. Okay. Because when price starts to continue up from that point, this is what would ideally happen. Price will come up and down. All right. Pump up, come back, come up. All right. That's what we're looking for. At the same time, the 13 and the 5 EMA will be like this. All right. That's what we're waiting for. But until the 5 and the 13 EMA show their presence in the chart, there's nothing for us to do other than to wait. All right. We can't go by the grounds that, yes, okay, the 13 EMA is edging upwards on the 15-minute time frame. Okay. And yeah, we've got this big green vector candle. I'm not seeing a follow through. But then again, Hong Kong hasn't opened yet. So we've got to be prepared. Okay. Now just look at it from this perspective. Look at the hour time frame. How many pins are there to the low? How many pins are there to the highs? What is it that they are favoring more of? They're favoring hitting the lows, which implies that they are looking to go higher, because in order for them to go higher, to get their orders filled at the lowest possible point, they've got to trap the retail trader into the belief that it's going lower. This candlestick today triggered a lot of guys to go short. They took out 2 pools of liquidity from earlier on today. They shifted price back up, rise, retrace, continuation up. New York today was a horrible session, guys. Look at the inconsistency. Absolutely terrible. There was nothing for us. Yesterday's New York session was wonderful. We had clear intention. This is what you want to, you want to be trading these sort of zones, okay? But looking at the way price is behaving right now, we all have to wait. Now, I'm talking in particular for day traders, all right? Roy, what's good, man? How you doing? No. Watching your videos since a few weeks, looking to get better using different EMAs. My question is, do you have a strategy written down? The channel is the strategy. The channel is the strategy, okay? We teach this strategy in real time. There is a playlist in the channel called Understanding the Hybrid. And if you want to know more about that, make your way over to the Discord, my friend, because that's where everyone holds it down, all right? Everything you need is in the description of the video, my friend. So it'd be good to see you there. All right, so here we go. It looks like Bitcoin is forming this W formation. Now, this W formation is sat at this previous zone right here. Now, if I'm all honest with you guys, I would have preferred Bitcoin to come down and test this zone right here. The fact that price is so close to this pool of liquidity right here. Now, when I say pool of liquidity, I'm talking about previous positions that the market maker had built his shorts from, okay? Because the market maker goes short when price is rising. He doesn't do what the retail trader does and goes short when it's dropping. That's a mug's game. However, you can go short when price is dropping only if momentum is on your side. Okay? So, I personally would have preferred Bitcoin to come down into this point because I would have been satisfied that they would have hit a pool of liquidity and they would have reversed from that point. Okay, because that's what normally happens. Price hits a pool of liquidity, it reverses because it's freed up a whole ton of orders in that zone. Okay, all the stops, liquidation points, and its existing orders, that is the market maker's orders, all of it is happening in that zone. Now, they may not want to send price down lower. They may just be content with this zone. So let's make the assumption that this is the zone that's going to send Bitcoin higher over the weekend. What do we need to see? Well, first things first, we need to see the 13 EMA crossing over the 1 hour 50 EMA. If that is too much for you to sit and wait for, then trading isn't for you. All right? You either get into marginal positions or you wait for the high probability setups. It's something that is thrown about so often in trading. Always wait for the best setup. There's no such thing as the best setup. All right? But you can improve the chances by being as accurate as possible. Accuracy can be 60%, 70%, 80%. Okay, now, will you ever get 100% accuracy? Well, if you did, you'd be a billionaire. But even if you can maintain a 60, 70, 80% accuracy of entry. Now, the way you determine accuracy of an entry is if you have minimal drawdown. All right, so here's an example. If you were to go short on this candle here, at the open of this candle right here, your drawdown would have been minimal. That would have probably been a 95% accuracy. Because your drawdown was actually near enough to zero. Okay? Price just went in the favor that you desired, and that was the short. All right? Now, say you went short here. All right? If you went short at this point, the journey that price traveled up would have determined effectively your accuracy. So let's assume that before you realize the profit, your accuracy would have probably been about 65% because you did see a drawdown. Price actually moved away from your entry quite significantly, considering it's the hour, and then it decided to drop. That's how you gauge accuracy. Okay? Now, moving forward from that, we need to see the 13 and the 5 EMA crossing over and price continuously staying above the 5 and the 13 EMA. At the same token, look left and see what reasons do they have to continue higher. You've got this big red vector candle where they released all of the shorts to the downside and started building longs. 2 stopping volume candles at the lows. It's screaming a retrace back up, but will the retrace continue? All right, will price continue from that point? So I say it to you once again. We are in the same boat as we were yesterday, guys. Isn't it typical how we are talking about the same situation? We are waiting for price to come above the 50 EMA on the 1 hour time frame. We want it to come back down, retest it to confirm that they have intentions to move higher, and then make the move to the upside to effectively recover this previous pool of liquidity here and potentially this pool of liquidity right there. Okay, now look at what happened yesterday. We were at this point, all right, and then Asia opened, What were we waiting for? We were waiting for the 5 and the 13 EMA to completely cross over the 50 EMA. Because we didn't get that, there are probably some guys that actually traded, okay, and went long on the basis that price had closed above the 50 EMA. That isn't enough. The 5 and the 13 are the momentum indicators. They give you the signal to tell you things are changing. Just look at the effect of them. 5 and 13 EMA cross over the 50 EMA. They cross over, then they start to expand. Price is moving down. The EMAs are expanding. Happy days. You could have gone short here, or even here, and you would have caught yourself a decent move to the downside. If you weren't happy with price, if you were to go short from this point here, and you weren't happy at closing in this zone, then boy, you'll never succeed in this game if you're not happy to pay yourself. All right? If Bitcoin decides to drop down lower, we won't be surprised if they come down to hit this pool of liquidity. Okay? You've got another pool of liquidity right here. Now, if they do bring price down into this zone in a freak drop, okay? Last week's low, which would have been formed right here, may be a point of interest, which will sit at the 800 EMA on the 1 hour, which is the 200 EMA on the 4 hourly. Now, the 200 EMA on the 4 hourly has not been seen for a long time. Look at how expanded it is away from price. And look how untidy my chart is. I need to tidy this stuff up, man. Okay. Are we good? Are we on the same page, ladies and gentlemen? Are we all good? I'm reading your comments. This could also be a rise level 2. It could be. It could be. Let's look at it. So what rise level 2 on what time frame, G-Unit? What time frame? Because that's important. Because remember, yeah, you can have a cycle within a cycle. All right? Here's a trip down memory lane. Check this out. Daily time frame. All right? Watch this. What cycle are we talking about? Are we talking about rise level 1? Rise level 2? Rise level 3? Are we still waiting for a rise level 3? Because price hasn't completely taken out the zone. Are we expecting that move to the upside? Because from what I could see on the daily time frame, price is stuck at the 13 EMA on the daily. Okay? Which is what? The 4 hour 50 EMA. Right there. We are at a very important point in the chart, ladies and gentlemen. It is literally make or break at this point, because if they violate this area here and break down completely, they will recover these previous pools of liquidity, which we would naturally expect. All right? Now, there's something that you will find with these streams, ladies and gentlemen. You'll never catch me drawing Fibonacci's. All right? You won't catch me drawing random support and resistance points. Okay, I have 2 support and resistance points, and they are set at the start of the week. That's the psychological high, which is right there. I'll show it you on the hour time frame. Here we go. Psychological high right there, and the psychological low. Because price does one of 2 things at this point. If it breaks above the psychological high, it continues higher. If it does continue higher, but then it comes back down to it and breaks through it, there's a good chance that that area right now has no interest by the market maker. Look left. They started the week off right here. Now, this is the start of a new crypto trading week, which is on the 21st at 5 minutes past 4 on this platform, because the broker's based in Moscow. That's where the server is based. Okay? Now, the broker itself is Australian, but the server is in Moscow. They start the week off there. Price hits the first high and the first low. They've set the spread for the rest of the week. The market maker bases his positions based on these 2 lines. These are the true support and resistance point in the chart. Not the TikTok trader guy who says, okay, that is an area of resistance and that is an area of support. Let's just wait for price to hit that zone and then we'll make our trades from it. Well, look at what had happened if you based that point as the low of the day. Okay? If you were to go short at the break of that, you would have been filled. Then price would have opened, okay, and would have sent you up and sent you back down again, okay? So, sorry, would have sent you down and then back up. So you would have realized a bit of a profit, but you would have stayed in the trade because you believed it was going to continue lower, and then it completely took you out and hit your stop, and then it's stuck in the range. All right? These are the two important parts of the chart, ladies and gentlemen, because that's where the market maker says, okay, we're going to base our orders in and around this zone. Look at what had happened. All right? They started off the week with a move to the downside. They broke lower, filled the orders in and around that zone, and they came straight back up. They marked price up to the upside, which was the start of the M formation at the start of the week. Okay? They built their shorts above key notable areas. What price is that, ladies and gentlemen? What price is it? It's the 50K. Okay? They build their shorts above key notable areas. If you dive into this candle formation right here, you're going to see some vector candles. All right? Zoom out. Look at what you see. Stopping volume right there. Vectors right here. Another stopping volume candle. Look at how they release the liquidity above the 50K zone. They built their shorts above key notable areas, and then they make the turn and broke away from the psychological high right there, and then they continued down to come and test the psychological low. They broke through it, came across, hit it once, came back down. Okay? Where was the support and resistance point right there in the chart? There was nothing else for it. No one would have drawn a support and resistance point in this zone. They wouldn't have based that as a support and resistance point, because they would have used this area instead. Look at how it pinned the psychological high and pulled, psychological low and pulled straight away. If that doesn't solidify to you true support and resistance, which is in relation to the spread that the market maker sets at the start of the week, then boy, you need to reach back onto TikTok and learn from there. All right? There's nothing else I can say to you. What did they do in this zone right here? Well, let's find the whole number. What number is it? 49,000 right there. Okay, so the 49,000 zone was the next point in the chart that they decided to mark up their shorts at the highest possible point. Look at what they did. Green vector candle spike above that zone, completely collapsed price down. Okay, psychological low, tested it once, came back above it, completely broke through it. All right, those are your true support and resistance points, guys. Not what the books say, and I'm sorry to say it. Right, let's have a look at what's going on across the board as well. All right, then let's get rid of this. Okay, have a look there. Get rid of that, make it nice and tidy. All right, then, so what has been moving or been holding? Let's have a look at Ethereum, for instance. Okay, so Ethereum is actually doing what she needs to do. Okay, this is the 50-minute time frame. Let's look on the 1 hour time frame. She's actually now working past this this violet vector candle. All right, you can guarantee every time you see this candle, they're going to come back towards it. All right, you can guarantee that. But building their shorts, their longs below key notable areas, below the 3,000, not below the 3,000, but 3,100 zone. Very important zone in the chart, guys. Very important. Okay. Noriega, what's good, man? How do you find this out for exchanges? Well, the indicators are provided in the Discord, okay? Because you can, if you download IC Markets, if you do have it, okay, the link is in the description. Go into the Discord, the Traders Reality Discord, and all the indicators are there free of charge. Don't charge anything for the indicators or the platform. It's all free of charge, guys. The only thing that you do need to pay for is your time and the time that you invest in sitting watching these streams, because we talk about the strategy in real time. All right. Now, Ethereum coming back up. All right. Before anything can happen, ladies and gentlemen, they do need to break above the 50 EMA. Now, I do believe that tomorrow we may see a little bit of activity to the upside. However, I can't guarantee anything to you. They may just continue this boring zone. They may even just send price up to the 50, come straight back down, and form what we may understand to be a potential inverted head and shoulders zone for Friday. Okay, and then the weekend will turn up, and then we will see potentially our true move, whether it's going to be to the upside or continuation back to the downside. Okay, now remember, in terms of time frames, guys, when you're trading, you need to be committed to the time frame that you are trading from. If it's the 5-minute time frame, use the 5-minute. Don't go to the daily and make your trades on the 5-minute, and then if the trade's going against you, you refer back to the daily and say, well, the daily's showing me the upside potential anyway, so I'm going to hold this trade. Don't do that. Okay? The only guarantees that you have in this game is if you hold a loss, you're guaranteed to lose your account. All right? Your goal is to limit that. Try and keep it as cheap as possible. See it like this. All right? You're just about to open a trade and the market maker approaches you and says to you, yo, man, what's the discount on your capital today? And you're like, what do you mean, what's the discount on your capital? He's going to say to you, well, how much are you going to give me? How much discount do I get on your capital? Well, let's look at it from a business point of view. If you were to start a business, do you think you're going to do pretty well if you're going to give 70% discount? No, you're not, are you? It's not going to work. The likewise with the market maker, okay? He's going to come to you and he's waiting for you to give him 100% discount on your capital. That means you're going to give him your capital. You want to keep your discount as cheap as possible. Because I know you would frown at the idea of giving someone 70% of your capital now, would you? Of course you would. 10%, man, that's just pushing it out for me. Okay? 6%, I can deal with that. 8%, okay, that's maximum. Because when you think about it, you only really need 8-9% to break even again. All right? 10%, you only need 11% to break even. So when you start rolling like 15, 20%, you need to be hitting 30, 40, 50, 60% just to break even. You know, you improve the chances of you staying in this game if you actually understand how to manage the money that you're putting down. It's not gambling. It's a gamble when you don't know what you're doing. All right? That's how it works, guys. It's all about understanding how to manage your behavior. All right? We don't know what they're going to do next. All we can go with is with what they're doing now. And what they're doing now is prices above the 5 and the 13 EMA on Ethereum. Fine. That's okay. Well, if they're going to keep price above that zone, what are we expecting them to do next? I want to see them break through the 50. Once they break through the 50, they need to retrace, test it, and then continue back up. All right? But look what's happened. The death cross has been hit. How wonderful. The death cross is hit, and the 50 and the 200 are expanding. That's bad news. So we need this move back up to come back up as fast as it can. Because if these two start expanding, that would mean that they are favoring lower prices. Okay? Are you still in the room with me, guys? Yep, wicked. Wonderful, wonderful. Today hasn't really given us anything, and it's always going to be in the evening when they decide to do things. Okay? I think they will always do that. You're trying to follow, man. Listen, guys, if you are new to the channel, don't worry. Okay? The idea is to get you going and start off with this week's streams. Okay? And just start watching, because the stream that I do in the afternoon is the follow-up for this, so that we can understand what to expect next. All right? Let's flip over to XRP. What's XRP doing? Well, XRP kind of fulfilled the pattern to the downside. Okay? She did that. M formation, drop, retrace, drop. Now, what are we expecting? Here you go. Here is a classic example of pins to the low. Just watch this. Here we go. 1, 2, 3. Wow, shoot. 3, and finally 4. What are they favoring? Are they favoring lower prices because they want to push price down lower, or they know that they can grab traders' attention by inducing them to go short and send price down and then grab the liquidity and move price back up? Just look at the behavior. This is not rejection, guys. This is market makers filling orders. Someone went short there. Someone went short. Someone went short. Before they can go short, someone has to be there buying. When someone sells, you can only sell if someone is buying. And that can only happen right there. Now, the reason why this wick has appeared is because the market maker fulfilled that obligation to the retail trader, made him believe that price was going to drop lower. At the same time, the trader who's opened his shorts has probably set liquidation points up here and stops. and Mr. Market Maker simply reversed it back up. That is the fair exchange of the game. That's how the business works. Oh, is it because a book in Amazon said that there's no interest in this area, which is why price moved back up? Get the... Nah, man. I ain't going to tolerate that. Sorry. Sorry, mate. Doesn't work like that. Sorry. But do you see what I'm trying to say to you guys? Okay. Bap, bap. Thank you very much for that. Size of peak formation equals size of rise level. Thanks, bro. Yes and no. Okay. You can have a small peak formation and you can have a very large move away from the zone. So the principle is the actual W formation. Okay. Let me explain something to you. The W formation itself is a psychological pattern. All right. Let me explain it to you. Right. Let's go down. Let me use Bitcoin because Bitcoin's a better example. All right. Okay, then. So, the best example of a W formation. Don't like that one. I'd use that one, but no. Right. I might end up using that one. Just bear with me a second. Okay, then cool. Let's use this one right here for the nature of this. Okay, because of the EMAs. All right, then. So, now this is a little bit of a difficult W formation because the criteria of a W formation says, right, that the first leg has to be longer than the second. However, with the exception that the second leg comes straight back into the first leg zone, then it's all happy days. All right. But this is for anybody who is new to the stream. We talk a lot about this peak formation. All right. What's going on, Vincent? We talk a lot about this peak formation. And it's what we wait for. Yet it's the one thing that we see all the time. All right. We see it happening over and over again. And we're always trying to grab it. So let me introduce to you what this W formation is about and why it's a psychological pattern and it's not just an image on my chart. Okay. Market makers, in order for them to move price lower, they have to induce retail traders to believe that price is going lower. What did you just do there, bro? All right. So you get that. Market makers induce traders to move price down. So they move price down to induce traders. How do they do it? Well, retail traders, they follow moving averages. They've got range trades that they do. So they draw boxes like this. And they say, if price breaks the low end of the box, I'm going to go short. If it breaks the upper side of the box, I'm going to go long. All right. Or they have these, what they call them, these pennant things where they'll link them up like this. They'll draw like that. Like that, however far they put it. And then they'll take the other peaks like that. And then they'll wait for them to drop or they'll wait for it to go up. Now, you would have been thrown about in this area right here if you were to trade the pennant in that instance. Now, there is a bit of a classification for the pennant, all right, or falling triangle, whatever you want to call it, okay? But you can see how they throw people off because not everyone's going to draw these pennants and these triangles and Toblerones the way that they should be drawn, okay? But look what would happen here. If you were waiting for price to break above that zone, you would have got filled, but you also would have got stopped out. Failure, okay? If you're waiting for it to come down to this point, okay, you would have got filled, dropped, but it would have come back up again. And then you would have gone in again at the long up there and you would have got thrown about and then price would have dropped eventually in the end. That's not what trading's about. All right. You don't want to be playing those sort of games. What if, what if, what if? All right. You need a clear strategy and you need to understand the psychology behind why price actually moves from one point to the next. Okay. It does help. And I'd say 90% of the game is based on psychology. Look at the pattern. Market maker induces trader to send price down. Traders are going short. Market maker has grabbed everyone's liquidity to the downside. Everyone's saying Bitcoin's dropping, it's dropping, it's dropping. Okay? Now, once price hits the lows, the market maker starts spiking the lows, trapping retail traders. He then reverses it back to the 50 EMA. Why? Because the guys that went short here have set liquidation points. All right. So those guys who went short here have been stopped out. All right. Because price has reversed back, because the retail trader doesn't pay himself. All right. Now, what's interesting is this. Once we hit the 50 EMA, what do they say in the books? If it hits a moving average and shows weakness, then it's probably going to go down again. Look at what it did here. So the retail trader will look back and say, oh, it's done it here again, right? I think I'm going to go short on this point. So because they don't want to miss out on the move to the downside, and considering that price looks like it's at the highs and it's dropping, the retail trader thinks, you know what? I ain't missing out on the move to the downside. I'm going short again. Look at what the market maker does. He gets busy in this zone. He marks price down lower. Whilst this is happening, he's aware that he's already built longs in this area. He can see that money's coming in and traders are going short. All right. He needs to get them committed one more time to trap enough liquidity to the downside so that he's got enough liquidity trapped up here in terms of liquidations and stops for him to release his longs. What happens? Price stalls. It starts to pull back. The retail trader thinks that this area right here is going to be the same as the 50 EMA up here. So he holds his position. Okay? But all the while, the market maker is releasing his liquidity and he breaks out of the zone completely, takes out all the liquidations and the stops, squashes all the retail traders in this area and makes a run for profit. This is why this pattern is psychological, guys, because people don't want to miss out. They don't want to miss out on the move to the downside. All right. They get stopped out. They get another opportunity to go short. They go short, but they don't live to see the tail because they have their stops and they can't close their trades because they don't want to be wrong because they were already wrong in the first instance. And then price reverses and moves all the way back up. That is what we're looking for, ladies and gentlemen. We are looking for these patterns. Is this the same pattern that we are seeing right here, right now? Is the market maker making the retail trader believe that price should be going down lower? Or has he thrown them off with all these wicks to the downside? Has he scared traders off? Or is he going to now establish momentum in one direction just to get traders back in? Well, ladies and gentlemen, let's have a look at some other coins. Man, I'm working up a sweat. Are you enjoying yourselves, guys? I hope you are enjoying yourself. Thank you for... Who was that? Who's become a member? Alex D, thank you very much, my friend. Thank you very much. Avid, man. Okay, then. Here we go. Sack trades, man. Bless you, man. Daniel, Tino, did you take any trades on USD today? I closed my trades today. I closed my trades with dollar yen because they were just being tricky, man. They were being really tricky. I was expecting price to continue higher and I ended up closing the trades because look at this dead zone, man. Look at that. I don't want to get caught up in that, man. And the unfortunate thing is this. Traders are actually trying to trade this stuff, man. Get out of it, man. You don't want to be trading these sort of situations. I mean, gold itself, look what was going on there. And funnily enough, guys, look what gold did. All right, Patreons, we had the conversation today, didn't we? Gold was looking to come back and recover this red vector candle. She did just that in the New York session. You know, beautiful formation right there. Okay, then let's get back to the plan. I need to take my inhaler. Give me a second, ladies and gentlemen. Okay, then. So let's have a look at some other coins. Cake. What's Cake doing? Cake's doing okay at the highs. It's all right. It's doing well. It hasn't broken anything that's going to give me any fear of anything. Every green vector candle that you see, it comes straight back down towards it. All right. Algo is not really doing much considering it was the star of the show this week. Okay. Not Algo. I'll get to AVAX in a short moment. Actually, let's just go over to AVAX right now. AVAX is actually doing okay. She's come down to the 200 EMA. Now, this is what we want to pay attention to, guys. Look at that little perfect little W formation. All right. Yes, it's come below the first leg, but it does look valid if it does hold. All right. Now, pay attention to the altcoins that are holding whilst Bitcoin and Ethereum are doing their job. Okay. We're trying to establish whether when Bitcoin holds and Ethereum holds or the big majors hold and the altcoins move because we have seen that behavior this week. All right. Now, pay attention to the coins that hold, because when Bitcoin and Ethereum and XRP start moving, the guys that have been holding and that have been performing well this week are probably going to explode. All right. I go every channel to wish death to crypto. So what the hell is this guy? Who the hell is this guy? Man, get rid of this guy. Please get rid of this guy. You're wasting your money there, bro. Wishing death to people. What's wrong with this bro? 28%, 100. Wow, M-Box. Let's have a look at M-Box. Good old M-Box. Hello, M-Box. M-Box. Interesting. Very interesting. What a great time to be listed, eh? Here we go. Yeah, thanks for the $2, man. It's unfortunate that you had to do that, bro, but okay. Just going through your comments. EGLD. Let's have a look. Wow. Considering it's an expensive coin, right? Well, reasonably priced coin. It's doing really well holding the zones. Just pay attention to what it's doing at the lows. Look, you can see red vector candles. There is a lot of accumulation in this coin. A lot. All right, look at all the red vector candles staying within the range. All right, they're not going anywhere. Within a $20 range. Just look at that. All right. And where are they doing it? They are doing it at around the what? We got the 150 mark. All right. We've got the 140. And now we've also got the 130 point. Right. There's the 130 point. So amongst these three zones right here, where can you establish that they are building more positions of? It looks like they're building their longs below the key 140 area so that they can get the best fill below that point to break higher. All right. If I'm correct with a couple of indicators out there, I think some of you guys may be aware of it, but what's it called? Point of control. Would that be in this area? Would the 140 mark be the point of control? I may be wrong, but if they're building their longs below the key notable area, that would tell me, okay, that would be the point of control. I may be wrong, but the way I understand how they build positions below whole numbers and half numbers tells me that might be that zone. So it'll be good to know that, actually. Yes, that is point of control. Happy days. Fucking hell. Excuse me. I shouldn't say that. I'll take that back. Point of control is 138. Oh, fair enough. I was close. That's fair enough. Or lower. It doesn't matter, guys. Doesn't matter. Ultimately, that's what it is. XTZ. I've seen XTZ do some big numbers today. Where is it? Oh, unfortunately, no, it hasn't. Okay, so earlier on today, it actually did do a good move to the upside in the Asian session and came straight back down. Fair enough. All right. But look, Ethereum, Bitcoin. All right. Trading against it. Now, what we can see here is quite interesting behavior. 200 EMAs pointing downwards, 50 EMAs pointing downwards, but it looks like he wants to try and come back up. That's on the hourly. Let me just bring up the 4 hourly. By principle, that tells me, okay, that they may bring price down to this point. It may actually happen. Sol is the only thing that's doing pretty well. All right. Sol's doing fantastic. Brilliant. Where's ADA? Here we go. ADA coming back up. Test the 50 EMA on the 4 hourly, which is a 200 EMA on the hourly. Perfect price action by ADA right now. ADA doesn't look like it's stopping, man. All right. But then when we look at the bigger time frame, guys, all right, we are expecting another move to the upside. There's no two ways about it. Bitcoin is due to make one more move to the upside because we have this pool of liquidity right there. Okay. This looks like it's the point that they're going to hold it. All right. Let's anticipate that they are going to do that because they did bring price down into this point right here and tap some of the liquidity. So that's going to be important. All right. Now, I want to do something for you guys. Okay. I want to go through something which is going to help you guys at the end of each of these streams. Okay. So here is something by one of these. It's my favorite trader, man. Next to Jesse Livermore. Okay. Ed. I love this guy. Okay. Eddie. Okay. Ed Sakatoa. Ed Sakota. Ed Sakota. I can't even say his name, man. All right. But this guy is an absolute monster of a trader. Okay. I want to bring this quote over to you. All right. This is the quote. This guy, absolute genius. All right. Now, a lot of crypto traders, okay, they may not know much about the actual traders in the game. All right. Not many people do. And I want to really introduce to you guys. All right. I want to introduce to you these traders because these are the guys that are making the games. Right, 5,000 to 15 million in just 12 years, but that's in the stock market. There was no sophisticated market, you know, none of these quick transactions. This guy was in the pits, okay? But he's got some awesome quotes, and a lot of them can resonate with people. You can't take a small loss. Sooner or later, you'll take the mother of all losses, all right? Here we go. This is crucial. Systems don't need to be changed. The trick is for a trader to develop a system with which he is compatible with. Okay? That's awesome. All right? Now, one of my favorite ones is this one. Markets are fundamentally volatile. No way around it. Your problem is not in the math. There is no math to get you out of having to experience uncertainty. That is all it is. All right? You can't put any math behind uncertainty. Finished. There's no way of doing it. Okay? You cannot conceptualize uncertainty. You are dealt with one option or the next. Is it going to happen? Is it not? Okay? If you want to know everything about the market, go to the beach. Push and pull your hands with the waves. Some are bigger waves, some are smaller. But if you try and push the wave out when it's coming in, it will never happen. The market is always right. And on that basis, ladies and gentlemen, I want you guys, okay, to just take trading seriously, all right? Get away from the idea of it going to be a get-rich-quick adventurous scheme because you will die poor, and that's from Jesse Livermore, all right? We have a strategy that is designed to help us understand market makers' behavior because we understand how the business model operates. When someone buys, someone has to sell. Market makers are liquidity providers. When you put in an order, they are matching the liquidity against your order because when you want to realize a profit, you take his money. When you close your trade at a loss, he takes your money. That is the nature of the game. All right? So, ladies and gentlemen, if you are new to the channel, be sure to like and subscribe. Okay? More importantly, if you are to consider joining the Patreon, don't. Because they will double charge you because it's towards the end of the month. I've had people ask me about it. Please don't join until the new month starts because you'll get charged twice. I just need to warn you for that. All right. But other than that, ladies and gentlemen, go and have yourselves a fantastic day. Okay. Evening. Use the weekend to practice. All right. And just trade well. That's all there is to it. All right. So. Mad love and respect to all of you. For anyone that's just passed through to the channel, my name is Tino. This is the Traders Reality Channel. All right? That was a bit of a boring ending, wasn't it? Mad love and respect to all of you guys. Take care of yourselves. Peace, man.